What if I told you that a single policy proposal could shut down the most famous career pipeline in the world? That the dreams of thousands of bright graduates from London, Toronto, Mumbai, and Shanghai to work on Wall Street could suddenly come with a six-figure price tag for their employers? A proposal from former President Donald Trump is sending shockwaves through the global finance and tech sectors. A potential $100,000 fee per H-1B visa. This isn't just political noise, it's a potential earthquake for international talent. In this video, we're going to break down exactly what this means for the future of Wall Street, for your career, and what you can do about it. Stick around because this affects you more than you think. Welcome back to Asset Bloom, your guide to navigating the complex worlds of finance, business, and global careers. I'm your host. Our mission here is to break down complex topics into actionable insights. Today, we're diving deep into the H-1B visa. For decades, this has been the golden ticket for global talent to work in the United States. It's the lifeblood of Silicon Valley, and crucially for our topic today, the invisible engine of Wall Street's junior banker program. Every year, elite investment banks like Goldman Sachs, Morgan Stanley, and J.P. Morgan Chase recruit hundreds of the world's best and brightest. Many of these juniors are international students who graduated from top U.S. universities. They are the workhorses of multi-billion-dollar deals. But this entire system is now being questioned. The proposal explained. So, what is actually being proposed? According to reports from Business Insider and Bloomberg, the idea is to increase the fee for an H-1B visa to as high as $100,000. Let's be clear, this fee would be paid by the company, not the employee. The stated goal is simple: to strongly incentivize companies to hire American first. To understand the shock, you need to understand the current math. Right now, recruiting a junior analyst is expensive. There's the salary, the bonus, the training. The current visa fee is a relatively small part of that. But imagine adding another $100,000 on top of that first-year cost. For a bank hiring 100 international analysts, that's an instant additional $10 million in costs. That's not a line item, that's a strategic decision. Let's take a hypothetical example. Meet Anya. Anya graduated top of her class from LSE in the UK. She aced her internship at a Wall Street bank in New York and got a full-time offer. Under the current system, her bank sponsors her H-1B visa. It's a paperwork hassle, but the cost is manageable. Under the new proposal, the bank's HR department now has to ask, is Anya worth an extra $100,000 compared to an equally qualified candidate from a U.S. university? Suddenly, Anya's exceptional grades and experience are being weighed against a massive financial disincentive. Her dream job now has a price tag that has nothing to do with her talent. The ripple effects. The immediate effect is obvious: fewer international junior bankers. But the ripple effects go much, much deeper. First, could this reverse the globalization of finance? Wall Street banks are global institutions. They need teams that understand Asian markets, European regulations, and Middle Eastern investors. By limiting the talent pool to only U.S. citizens, banks risk losing that crucial global perspective at the junior level, where future leaders are forged. Second, it could cause a brain drain from U.S. universities. Top U.S. MBA and finance master's programs are filled with international students. A huge part of their value proposition is the chance to work in the U.S. after graduation. If that path is blocked by a $100,000 barrier, these students may choose to study in the UK, Canada, or Singapore instead. The US would be actively exporting its future financial talent. Third, expect a domino effect on tech and other industries. The tech industry relies even more heavily on H-1B visas. If this policy goes through, the business models of countless US tech startups and giants would be disrupted. The fight for talent would become a domestic-only affair, potentially pushing innovation to other shores. Your practical action plan. This is a worrying proposal, but it is not law yet. And whether it happens or not, the key is to be prepared. So, if you are an aspiring international professional, here is your 4-step action plan. Step 1. Diversify your geographic focus. Do not put all your eggs in the U.S. basket. Start researching financial hubs like London, Toronto, Frankfurt, Singapore, and Dubai. These cities have thriving finance sectors and often more accessible visa processes for skilled talent. Look at Banks' career pages for these locations. Step 2. Double down on uniquely valuable skills. If a company is going to spend $100,000 on you, you need to be irreplaceable. Go beyond standard financial modeling. Develop deep expertise in a high-demand niche like sustainable finance, also known as ESG, or AI and quant analysis, or private credit. Make your skill set so specific and valuable that the cost becomes justifiable. Step 3. Build a powerful network. Networking has always been important. Now it's critical. Connect with professionals at your target firms on LinkedIn, not just in the US, but globally. Attend virtual and in-person industry events. A strong internal advocate within a company can make a powerful case for sponsoring you, regardless of cost. Step 4. Stay informed, not anxious. Follow reliable news sources like Bloomberg, Reuters, and the Wall Street Journal for updates. Do not get caught up in hype. Understand that the political process is slow, and this proposal may change significantly or not pass at all. Control what you can control: your skills, your network, and your options. So, is a $100,000 visa fee the end of Wall Street's junior bankers? Not necessarily. But it is a potential watershed moment that could reshape the global flow of financial talent. It forces a conversation about the value of international workers and the true cost of protectionism. The future of global careers may be less centered on a single country and more distributed across multiple thriving hubs. The most successful professionals will be those who are agile, skilled, and globally minded. What do you think? Is this proposal a necessary step for American workers or a dangerous move for the U.S. economy? Let me know your thoughts in the comments below. I read every single one. If you found this deep dive helpful, please hit the like button and subscribe to Asset Bloom for more clear-eyed analysis of finance and business trends. Share this video with a friend who might be affected. For our next video, we're breaking down the rise of private credit as the new powerhouse of Wall Street. Smash that notification bell so you don't miss it. Thanks for watching. This is Asset Bloom, helping you bloom your assets and your career.